Hey, Job here. On this channel, I invest 100% of my income and live out of my Robinhood brokerage account. I've been doing this since the end of May 2025, and if all goes well, hopefully this strategy will bring me to an early retirement at 40 years old, in roughly 4 years from now. It's honestly a very aggressive strategy for sure, but after almost a year running this next month, it's yielding some very promising results so far. Like I said in my very first video on the channel, one of the reasons I started dabbling in high yield ETFs to begin with was to safeguard against potential layoffs in the games industry. It's still honestly all very volatile right now, and I'm honestly still on the edge of my seat, even with this new job. Nowhere I really feel safe right now, especially in North America. And yeah, it's I don't feel like this feeling has changed, right? I really feel like I need to double down on my portfolio to really safeguard myself. But yeah, luckily my portfolio has done just that though. Like it helped me through tough times when I was laid off a couple months ago. It really cushioned the blow of the layoffs and provided me with a good chunk of income to live off of, along with the unemployment income I was getting. I'm hoping that like next time, if knock on wood, I don't want this to happen, but if it happens again that I get laid off, I don't want to have to rely on unemployment income this time. I wanted that to be more of a bonus, and I want like my portfolio to be kind of paying me already my full net salary, right? More and more, I'm slowly battle testing this strategy even more with real life scenarios, from the layoff that I just talked about to the rapid downturns we got with the Iran war recently. At this point, I think I would really just need to go through a big like 20-30% downturn, similar to like the tech downturn we had in 2022 or whatnot, or even COVID, to really battle test this to make sure that it survives and does good. But assuming that it does, the portfolio might be good for the long haul, assuming I can weather a downturn and still be investing throughout it, right? And through that dip. But yeah, back to the main topic of the video. Since I recently started my new job with a little bit of a different income balance than I was making before, I wanted to make a separate video breaking down my new weekly flow in depth that I can link to in future videos. I'll go over all my investing percentages for my full paycheck that I'll be investing week in, week out, how I handle drip, how I use margin to pay for expenses, etc. If you appreciate all the transparency, give a like and subscribe. And just as a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Make sure you read this disclaimer carefully. And yeah, let's just pop over to the weekly flow sheet here. So yeah, like I said, I invest 100% of my income, right? And this is the flowchart that I use pretty much every week. And that's how I live out of my brokerage and invest my full paycheck. So my paycheck comes in every week, and whether that's my paycheck, cash back, any business income, that all just flows to the brokerage account and all gets fully invested. So 100% of that. So currently my paycheck is roughly 2.25K a week, or roughly 9.75K a month. And that all gets flowed to my Robinhood taxable brokerage account, right? And currently how I'm splitting things is it's a little bit different than what I was doing. I used to do a 40% growth split and then a 60% high yield. And so after the layoff, I kind of wanted to go a little bit heavier on the high yield side. So I'm only doing 10% in growth now from the paycheck. So that goes into growth and dividend growth ETFs that I have. So QQQM, SCHD, VGT, ORR, CLSC, VOO, SPMO, things like that. Any dividends that I receive quarterly from these get reinvested back into growth. And yeah, I don't actually just reinvest them into the same positions. I like say SCHD has a big dividend that comes in. I might just see what is actually low that month for the growth side of things. And then as far as the high yield side, 90% of the paycheck will go towards that. So really, I've just been focusing. Last year, I kind of over-indexed on kind of like the high flyers, the higher yielders, such as like Ulti, YMAX, and things like that. And this year, I'm really refocusing on the core anchors of my high yield ETF. So really focusing on like the 10 to 20% yielders. So XSPY, SPY, QQQI, TSPY, TDAC, MLPI, IAUI, and any income that deposits from the high yield, that just gets deposited to cash and margin, just to kind of help control the margin balance, right? So right now, that's currently roughly 4.8K a month that I'm getting from my high yield ETFs, which is great. And really, what I'm doing is treating my brokerage like a bank. So you may not know this, but like when you deposit money in a bank into savings, right? They basically take that money, loan it out to other people, and they make interest on those loans, and they give you a small portion, especially the big banks. The big banks will give you 0.03%, right? That's why it's nice to do the high yield savings accounts instead with the smaller online banks. But yeah, so they pocket a lot of the profits and a lot of the interest. But yeah, I'm kind of flipping the script there where I'm kind of taking out loans and living off my brokerage here. So what I'm doing is that like I'm borrowing against the assets on margin at a 4.5% interest rate. But yeah, but I have a good portion of my portfolio invested into high yield income, right? And that's making a blended yield of like 30% currently, if you just factor in the high yield income side. So that's a pretty good spread, right? It's like a little less than 26% yield on that 4.5% margin interest. So instead of just paying myself a little yield like a bank might do, I'm actually kind of keeping all of that for myself and reinvesting into the portfolio or paying down margin and whatnot. So not much leaves the portfolio, right? It all kind of stays into this kind of closed loop. So like I said, I borrow against the full value of the portfolio on margin, right? I never sell any positions. The only time I'll sell is to actually rebalance between funds, but I never sell any positions to take money out of the account. How the money leaves is basically a loan against the assets, right? And yeah, honestly, I wish my mortgage interest rate was this low at 4.5%. I really love Robinhood's interest rate for that. And yeah, and that pays all my bills and monthly expenses. So roughly my monthly expenses ranges anywhere between 7 and 9K a month on average. And really what gets added to the margin balance every month is the difference between this monthly expenses and the monthly dividends, right? So these monthly dividends are growing, and yeah, eventually this will kind of eclipse the monthly expenses. But until then, anytime there's a difference there, that gets added to margin balance every month. And then the idea is that I rinse and repeat this every week, and then hopefully that will help me reach my goal of retiring by 40 years old. So yeah, that's really the portfolio end goal here. It's to replace my full salary with monthly income from the portfolio and retire early by 40 years old. So that's in just 4 years from now. So it's coming up fast. But yeah, that's the gist of the thing. If strategy changes, I'll probably make another video of these to basically link to anytime I go over this chart. I'll probably not be going over this chart as much in future videos, and we'll just link to this one. But yeah, I'll just keep updating this as that happens. But that's the flow. If anyone has any questions, feel free to drop any questions in the comments below. We'll be happy to answer them and maybe do a follow-up video. But yeah, it's a strategy that I've been enjoying. It feels really good to just be like really paying myself first in the true sense of the word, right? It's like normally when you say pay yourself first, you're doing like 10, 20, 30% of your salary, and then you invest it first before paying your bills. But this is like 100% of my income, like all my income, every penny that I make gets put into the portfolio. So as a result, it really pushes things up. And I mean, I show this during the months, the monthly updates, but you can kind of really see since I started how much has grown, right? From my initial gross salary at 205.8K to now I was at 374.7K last month, and yeah, and net value 117.8K and now 202.3K. So growing a lot. But yeah, the strategy is working well for me so far. Even through a layoff and even through big downturns that we've had, I just keep investing whether the market's up or down. So with that said, if you want to keep supporting the channel, you can check out my videos, descriptions below, because that has all the main links that you'll need. If you want to check out my free Snowball portfolio and see this that I show every week, you can kind of check the link below. There's my free portfolio spreadsheet tracker. It's basically a template of this with that you can kind of modify as you need. You have the free Discord server that I always talk about. A lot of great conversation there with like-minded investors. My free Blossom social profile, and then there's also the Patreon and YouTube membership if you want to support the channel that way. And there's also some free components of the Patreon, right? If you appreciate all this transparency, make sure to give a like and subscribe, and I'll catch you in the next video. Peace.